Good morning, everyone. Buenos dias. Good morning, everyone. I don't get to see everyone here on my phone, so hopefully I don't miss anyone here. I just want to say thank you, affiliates, for always being here and being on time and supporting our office. And in celebration of also the Chinese Lunar Year, I want to go ahead and begin with the first affiliate that I'm seeing here, which is Sandy. So, Sandy, why don't we get you to begin?
I thank you so much, Sylvia, even though Scotty was here first, but I think because I was talking last,
Okay.
I bumped him off first place, and that's okay. Good morning, everyone. Sandy Franco, First American Home Warranty. Remember, I am your CRES authorized home warranty expert. Been doing this for over 20 years, so I'm going to say expert, and I'm going to own that. If your clients have issues, I am here to help. This is what I do all day, every day. So reach out, let me be your partner, and let's make 2023 fantastic. And you know, on a side note, I'm seeing a lot of ADUs still. If there's an ADU on the property that's not attached or it has its own entrance, it needs its own coverage. So keep that in mind. And when it has that and you're writing offers, bump it up a couple $100 to make sure we have enough coverage going forward, or shoot me the address beforehand so I can make sure that you ask for the right amount. I'll put my info into chat, and have a great day.
Great. Thank you so much. I appreciate that. And next, we'll have Scott go next.
Hey, everybody, Scott Shimamoto, Journey Mortgage Advisors, and Sandy and I were talking about the high gas bills right now, and she brought up a really good point that you should have your home inspected for leaks, because you might have leaks. And I'm giving this, this is Sandy's idea, but as far as the mortgage side, we feel like the analysts are thinking that the inflation is starting to really get under control. So we feel like rates might start coming down, but still, when you're buying a house, you marry the house, you date the rate, because you could always refinance and get lower on the rate when rates come down. So, if you have buyers out there that are hesitant to buy right now because they think that rates are high, tell them, hey, buy the house. The price might be a little bit lower right now because the rates are a little bit higher, and, refinance out of it later. And I'd love to help your clients with a pre-approval. Thanks for letting us do this.
Scott, that was pretty cool. Hang on a second. Okay. Can you still hear me?
We can hear you. You're real blurry.
I can't hear you guys anymore.
Oh, wow. Can you hear me, Sylvia?
Can you hear me?
We can hear you.
Hi, Sylvia.
I'll wait for Sylvia to maybe restart her phone or whatnot. I forgot who we're down the line, but Scott, you were finished, right? So let's
Yes.
go ahead to Annie. Then she popped in. Annie.
Hi, Happy
Let's
New
get
Year.
you introduced. Happy New Year's, and good to see you. Yeah, start with Annie. Why don't you start in?
Okay, great. Well, Happy New Year, everybody. It's 2023, so if you haven't done your business planning, you still got time. We just, still in the middle of our Chinese New Year, and I have some tools that can help you figure out how many transactions you need to do in order to get where you at, and with all the action steps. And let me know. We'd love to meet up with you in person, go over that, and help you to jumpstart your 2023. And then thank you so much, Kelvin.
I know you got your business plan done, right?
Yes, I did.
Awesome. Okay, so thank you, Annie. I'm sorry if I missed the affiliates, but I'm out of order now. So let's go ahead and start with. I saw Brandon on here, and then we'll do Sage Gomez. Did you already go yet?
No, Kelvin, I'm back. No, it was just Sandy, Scott, and then I guess Annie right now.
Okay.
Okay, and I kind of got blocked out, so I had to go off the other side. I wanted to let Scott know that was a pretty cool saying that he had, where he says, marry the house and date the rate. So I'm going to use that, Scott. Who I see in line is Brandon. Are we inviting Brandon to come in now?
Yeah, let's do Brandon.
Okay.
Can you guys hear me? Yes.
Yeah.
Okay. Good morning. Happy New Year. Gong hei fa choi, gong shi fa cai. Hope everyone. I know I do. I did that pretty good. West San Gabriel taught me well. So we have a new tax estimator. I don't know if you guys have seen it on our website, but the tax estimator, I know when you guys, when it comes to tax season, we are coming around to tax season. So if you're looking to just type in an address and find out what that basic tax information is on those properties, we have that on our main website. And this is just a great tool for you guys to either provide this to potential clients, or if you're looking up properties, this is just something in your tool belt that'll just allow you to be able to prospect and get that information. And you'll be able to get that prior to getting the NHD report. So this is something that you could even do prior to going to listing pitch, find out that tax information, and you'll just be able to be a rock star to those people who you want to be your future clients. So if you have any questions, I'll put my info in the chat. I hope everyone has a fantastic week, and I look forward to seeing you guys next time.
Sounds perfect. Thank you, Brandon. Appreciate that. Next here, I see Sage. Sage, you're up.
Good morning, everyone. Happy Chinese New Year. Just a reminder, I've said it once, I'll say it again. With your office, you have the CRESS E&O insurance, so make sure that you write CRESS NHG on your RPA. That way you get an additional $25,000 in CRESS E&O insurance. Other than that, if you guys need anything in regard to natural hazard disclosure, if you're curious, or if you're in a flood or fire zone, just text me. I can get that information to you for free. And everyone have a great day.
Thank you so much. Appreciate that. That CRESS reminder is always helpful. Appreciate it. Next, who I see here is Unita. Unita, you're up.
Good morning, everyone. Happy New Year. Gong xi fa choi. And hopefully you guys having a wonderful 2023 so far. I do want to let you know we're still 13 months home warranty. We do give additional 1 month free. We do bring in a new brochure coming up in the spring. One of the items that I do want to bring everybody attention that we recently just worked with LG, Whirlpool, and different appliances company directly. So if you are running any issue with the claim, those people be able to get the part directly from the warehouse. So then your claim could be able to get even smoother, because those part is going to be easier to get from the real vendors directly. And if you have any issue with the home warranty, please let me know. We're here to help you. And if you have any ordering for upcoming closing for January, February, please send me an email, CC me a copy. I want to make sure that everybody gets taken care of your client. And I do speak English, Chinese, Mandarin, and Indonesian as well. Thank you again for your continued support.
Thank you so much. I appreciate that. And I love how you say you speak English. Can you speak English right now?
Yes, absolutely. And we do have a Spanish brochure too, if you guys need a Spanish brochure.
Oh, nice. Thank you. I feel the love. Appreciate it.
Thank you.
Excellent. You're welcome. I'm going up here and I'm going up the line and I'm going down the line. And it looks like we covered all the affiliates. Are there any affiliate here that I missed? Any affiliate that I don't see here?
Jason, do you see me on there?
I don't see Jason, but Jason, go for it. You're up.
Oh, hey, everybody. Jason, let me see if am I on the looks like I got the video going. Anyways, this is Jason with Property ID. Just want to say good morning to everybody. And if anybody's working on any ADUs, let me know. Let me jump in and get the NHD report for you to go over. There's a lot of issues we're having with it. If anybody gets an ADU that they're going to get a listing on, or if they're even potentially buying something for what they're working with one of their buyers, let me know so I can jump in and I'll help you kind of look through it and make sure there's any red flags that are coming up. We're having some issues where the buyers are buying these properties thinking they could build an ADU into the back and finding out that they can't. but I'd like to jump in ahead of time before you even get into escrow or close escrow, especially to help any, alleviate any lawsuits or anything. But yeah, thanks everybody. And as soon as you get a listing or represent a buyer, let me know. No charge for the report until it closes. Free if it cancels. But yeah, let me be a part of your team out there and help everybody for the new year. Jason with Property ID. Thanks everybody.
Thank you. Love that. Love how we have a great camaraderie here with all the affiliates and all the agents. And that's just part of all the culture equity we have here and all the affiliate equity that we have here. So appreciate that. There's enough business to go around for everybody. So I'm going up and down here, and I don't see anybody else or anyone else that we have missed. The affiliate here. I'm going to close the affiliate session, and nice bridge there. You know. So I know there's a couple of slides that Jael added for me, Calvin. So I'll tap on those when they come up. So I'm going to hand it over to you now, Calvin.
Sounds good. I'll get my slides going on. Thanks for the introduction. And hopefully you guys can start seeing my screen. I'm going to put up the meeting slides. Someone say yes. We see this little affiliates. Thank you. Appreciate you all being here and joining us this morning on this beautiful Lunar New Year week. Is this one of your slides? Happy birthday, January babies.
Yes, I don't get to see the slides. Something's happening on my end. I keep showing back up. So yes, I'm sure Jael get a beautiful birthday slide. So I just want to, on behalf of the company, the family, staff, management, let everyone know that we on your birthday, we celebrate you, we celebrate your life, and we appreciate you. We're not going to list birthday names because we want to be all inclusive. We want to include and come everyone that's shy and they're not shy and not forget anybody. So we just want to say happy birthday to everyone that was born in January.
And to be all inclusive, February, March, April, May, June, July, August. everyone, we're gonna wish you guys as the month progresses. Our next slide is a quote, our inspiration is, and I think this is a really cute little umbrella here. I don't know if Sylvia, you could read it.
Yeah, and that's from Mark Ramos. Mark Ramos sent that over. It's adorable. I couldn't wait to share it. So it cares who it falls upon. So I mean, look, different ways, you know. The red is feng shui red. The galoshes, I don't date myself, you know, rain boots in my area, you found galoshes. And it got green ones for the Chinese New Year, green gold with the yellow jacket there.
Okay. I really like the quote. It's very cute. Thanks, Sylvia. Because we do want to make sure that we're always putting our best foot forward. Kindness is something that is, you know, if you're really genuinely kind, you don't discriminate against anyone. You're really just kind to everyone. You give everyone the benefit of the doubt. And at the end of the day, you want to make sure that you are spreading the cheer, spreading the news, whether it's rainy, bad news or good news. We're here bearing, at least giving everyone the updates in the real estate, the housing market, keeping people informed so we can prepare. So if we're heading into a rainy day, let's get our umbrellas out. Let's prepare for that rainy day, right? And so I'll give you a little market update and a little taste of what's going on in the upcoming today's meeting. So you got it in a special treat today. So I'll give you a little market update, when to expect rates to improve, and a lot of cool things that will help you in your conversations and presentations with your clients. Just a reminder on classes and education, you can always go to either the West End Gable or the Arcadia Association of Realtors. They all have on their sites really good classes for you to attend. Virtually, we have a couple of ones coming up. This is a retirement dilemmas, how to avoid costly mistakes. We have another class for CRMLS training. If you just want to improve some of your essential, I guess, tips and tricks, go to Matrix and learn Agent Essentials right here. And then we also have the new buyer representation agreement. This is the newly revised buyer broker agreement that we've been rarely used, but this is a day and age and when we have buyers that are less and less loyal slash committed to working with one realtor forever, this may be a time for you to protect yourself and your commission when you work with others. There's also some other good classes that, especially this is video recordings. I still want to point out to you that CAR has legal risk management. So there's a link in here. And this link will point you to all of their live webinars and recorded webinars. These are taught by attorneys. So I want you to understand these are well-trained instructors who can teach you the nitty-gritty from mediation and RPA disputes. This one is regarding the fire hardening disclosure that we all kind of sometimes are confused on whether we are in or not in a high fire zone. There's a new and revised forms that just came out in December. So those releases of the changes, if you want to hear from the attorneys why we revised some forms, why they changed the language, they will explain in detail here. I listen to these because as a broker manager, I need to be up to date, but I count on you guys to also try to be up to date as best you can. This one is regarding the revised RPA. So on January 9th, they just had the December revisions. So if you want to watch this one, Neil Kalian is who was my former instructor when I got CAR certified. So I know him very well. And AB 2179, if you're interested in anything like that, go ahead and take a look. There's a link here. It's car.org/risk management-live. I also like to point out, if you're into property management, there is a big conference hosted by CAR virtually. So if you want, there's a recording session / you can pay $19 and start off the new year with opportunities to grow your business, learn about revenue streams within property management. As a company, we don't encourage property management because the benefits of property management kind of outweigh the cons. So there's a lot of risk that you take on when you're dealing with a lot of tenants. And so, but if you want to learn about they're going to talk about opportunities here. The speaker on this one is also Jordan Levine, and they have the economists out there talking about it. I have a commercial class that's a privately shared link that's right here. And I wanted to give you a little market update really quick. These are the brief description just recently written. So Americans are financially preparing for challenges in 2023. Despite inflation showing some signals that is slowing down, consumers are managing their spending. They're a little bit more closely. They're showing some restraint from overspending during the holidays. So these are all now factual data that has come back that people are preparing, at least having a little bit more conservative attitude. And economic data suggests this will continue in the short term. So we just really want to understand that housing demand is relatively depressed. It's a little bit still remains slow because rates appear to be relatively still high. And so the affordability issue is a challenge for people who are first time or in the market, relatively in the market to buy. But the lower mortgage rates and the softer home price appreciation may help bring some buyers off the sidelines. So we've seen a very, very modest increase in sales activity recently in January. And as we prepare for February, I'll give you a little bit more updates as well. So here is where I got the links from Oscar Way. He recently did a leadership presentation that I was very happy to get and shared with these files. So as I pull this up, I need someone to say yes or no if you could see my share file being pulled up right now. If not, I'll redo it.
Yeah, we saw it.
You see it? You see it now? Jean?
No, just
Nope.
see here.
Okay, let me make sure we got it. Thank you. Hopefully you guys see it now. I have a PowerPoint with California housing market update. Someone say yes or no.
Yeah, we saw California housing market update.
Perfect. So less than a week ago, Oscar Way just gave us a little bit of slides. I know, is it smaller? I can try to make it a little bit bigger if you like.
Please. Yeah, make it bigger.
Is it better
Yeah,
now,
right.
Gene?
Not bigger enough yet.
Right now?
No,
Nope.
nothing response.
Okay, I think it'll be better now, Gene.
Yeah, right now, yes.
Perfect. All right, thanks for being patient with me. So this is where inflation is the key thing that the Fed is looking at. And they do say and see that inflation continues to trend down. Energy prices level off. We all see, I actually saw $3.99 at my local Sam's Club and an Arco nearby. We're under $4 on gas. So that's finally showing some energy decline in prices. Someone affiliate mentioned earlier that gas, at least SoCal gas or the energy gas might be slightly going up. But for us, you know, that's a good signal. It's a good signal that things are going to cool off. And in my opinion, as a broker, I think we're experiencing what's called a mild recession, hopefully a softer landing. So that's what we're finding and realizing. The Fed funds rate will climb further. Okay, so they are anticipating a 25 basis point increase to the Fed funds rate target. So if you look here on the slides, back in the prior meetings, they were anticipating at January 18th, a 95% chance of a 450 to 475 funds rate target range. So you can see that sentiment has kind of some coming to true. So a little bit more certainty to be a small 25 basis point increase. That's not bad. So as we look at core CPI and CPI indexes, I look at, as an economist, the plot map at the right. You see these dot plots? Each of these is an opinion of one economist at the Fed. And they all believe and kind of signaling to us that in 2023 to 2024, we could start seeing a trend line down in their Fed funds rate predicted target rates. What does this mean? Basically, we anticipate to get back down to, in the long term, back to a goal of 2 to 3% healthy CPI. To get there, we're going to have 2024 probably closest towards a 4% to 4.25% Fed funds rate target goal. And then not until 2025 will we start seeing a more significant decline to kind of just let us land softly on the runway so that we're not totally making our markets go crazy. Okay, so this is a good signal that this 2023 year will probably be the hardest year yet in terms of recessionary / too much inflation going on, but we will achieve the goal within the next year or two. So when we look at the economy and the slowing signs of slowing down in various sectors, we'll see that automakers, you know, I'm not, this is not too much, I'm gonna skip some slides. I don't want to spend too much time on that. The jobs report does show a sign of cooling down lately. So December showed the lowest month in terms of loss of jobs, unemployment throughout the whole 2022. And a couple of, I think last month, they just announced Wells Fargo fired the entire half or a little bit larger than half of the mortgage division. And Wells Fargo said they're not going to do any more new clients, new customers in doing home mortgages. That's big news because Wells Fargo was #1 providing regular retail home mortgages in the nation. So they were at the top, and now they decided to, I guess, slim down that section of their division. So with less mortgages going on, I know there's a lot of slowdown in mortgage applications going on. But when we look at the households, we see that the financial situation, more and more people are predicting that 2023, they're a little bit more worse off how they will be financially 1 year from now. But a vast majority of people do say we're going to be just about the same. Most of the people are optimistic that they will survive. We don't see a crash coming because back in 2008, the last crash, it was because mortgages, people weren't really able to afford it. And underwriting was very, very simple and easy for people to get a loan. Now underwriting is very tough and stringent and they check everything. So we don't expect a crash. We don't expect a bunch of short sales or foreclosures to happen. And I quite honestly don't see a greater than 5 to 10% decline in values of home values across the board. I'm actually believing it's very, very modest, mild, maybe 1 to 3% decline in values, depending on where you are in the what neck of the woods you're at. But in our area, San Gabriel Valley, our values should be holding relatively the same. Growth expectations in consumer planning, they do plan on spending less. In 2022, as people got a lot of what you call American recovery, what's the rescue plan that? Anyway, we did have a lot of stimulus. And as there was a lot of stimulus money going around, people were spending like crazy. Now we're seeing a lot more decline in spending, consumer spending. So this is CEO opinions. And for the US, people believe, the CEOs and people who run a lot of global Fortune 500 companies, 29 and 31% of them believe that economic GDP will be positive in the US relatively, we see end of 2023 to 2024. That's when they predict everything will be back to normal. And you look at other countries like China, they seem to be back to normal would be either end of 2023 or beyond 2024. So it's kind of very, very dichotic in their opinions, whether it's going to be very, very optimistic or very pessimistic when they will be back to normal. And then you look at maybe, for example, Europe, it's very relatively flat. It's just, these are opinions of CEOs. So I don't know how this data is actually formulated, but it is cool to look at the economic outlook as we forecast 2023 as we just started the year. So we have US GDP forecasted to be a negative 0.5%. As we have some unemployment uptick, we're seeing a little bit of a CPI being around 4.4, which is not too bad. It was much higher, 8% predicted last year. So disposable income percentage change to owners relatively remains flat. So that's what we are looking at in terms of the US outlook. Remember, these slides are prepared by a California economist. So we're going to look at a little bit about some of this California data too soon. In terms of buying sentiment, most people are thinking, and relatively speaking, it's not a great time to buy net. So you can see here, buying sentiment ever since 2021, it was very high. Good time to buy, and we can see it kind of declining. Most people are predicting a bad time to buy right now. But I'm going to give you some reasons why it's a good time to buy too. So in terms of seller sentiment, they also don't think it's a great time to sell. You can see a downward trend net where people are thinking it's not a good time to set. I could tell you inventory levels are relatively across the board are lower. So this is actually maybe still a good time to put your property on the market. So how do we look at this? Well, what are we looking at from December, month to month, and year over year changes? In terms of existing home sales, year to date is 23% decline of 2022 sales versus December of 2021. That's a lot of less activity, sales activity. And just year to year, in terms of the number of sales, is 44% year to year, less home sales. For the price wise is also showing, the median price, $774,000 in California. 2.7 months of inventory and 28 days on market. Year over year, that's 133%. Back last year, everything was flying off the shelves like hotcakes. Right now, sales have declined. It's taking longer days on market to sell something. And this is on record, one of the slowest sales declines that we've experienced in the last, what is this, January of 2010. These are significant low in the past 12 years. We could see how slow it's been to decline year-over-year changes as compared to any other January of any other year in the last 13 years. Okay. So because sales have gotten worse in high price segments, no one likes to buy a $2, $3, $5 million property when rates are at 6% plus. So they have been suffering / a lot less sales in that high luxury division. But in terms of the individual price tier dipped, they dipped modestly at year end. So year end, we're seeing a year over year negative 9% decline in value from last year. New listings are down to the lowest levels in at least 5 years. So remember we were having a listing shortage last year. Everything was flying off the shelves. Well, here's the number of new listings as of 2023. This bar chart right here, if you compare it to the year prior, it's also relatively low last year, but you can see it's even lower than that. So that is a signal for us listing agents that why not put your property in the market when there's the least amount of competition? When there's less competition, more people and more activity and more people at your open houses will occur right now because there's less inventory across the board. So year over year change in new listings, you can see here it's about negative 15% as of December, end of December. So to me, that's a good reason why you want activity. You don't want, if you have 5 homes across every, left, right, and north, south, then you're going to have too much competition where you're not going to get your price. But if you're a seller that, hey, you're the only one on the market on that street or within the half-mile distance, there's only one other competition, that's a very good time to put your property on the market and hopefully get your price. So this is the data that keeps some properties away from being listed. And there's a certain amount of mortgages or Freddie Mac / Fannie Mae have mortgages that they are backing and they are not going to be listing them probably for whatever reasons, or maybe it's foreclosure moratoriums or / they're trying to keep people in home, or people who are behind, they're going to work with them with some sort of loan mod. So most people, 99% of the Fannie Mae, the Freddie Mac data that they provided as of June, 99% of people are current on their mortgages. So if people are current, and as of June 2022, everyone prior to then have a very attractive rate that's less than 4%, right? 99% is current. That means only 1% default rate. There's not going to have a short sale foreclosure environment. Okay, it's not coming. So everyone who's saying, I'm going to wait for a short sale, I'm going to wait for prices to be on a crazy sale or wholesale pricing, you could keep waiting and waiting, but I don't think you're going to find it. Okay, now is the time to buy. There's very few competition, a little bit less buyers than you're going to compete against. Like last year, you might have 15 to 20 multiple offers. You might not only have 1 to 4 multiple offers right now for if you're shopping for any home. You don't have that kind of crazy competition. You're going to get the terms that the buyers that we weren't able to get, like a full 17 or 21 day contingency period. So we're going to get those contingency periods for those of us representing buyers. So the current interest rates are showing this, and for the Freddie Mac, 63% of their mortgages are from 3 to 4%. So a vast majority of Americans are going to continue to keep being current on their mortgage because they don't want to lose, and they locked in really great rates. So you're not going to see too much of that foreclosure activity. Consumers expect prices to go down. could really delay their home purchase very, very far out. What does that mean? Well, if I'm a buyer, I'm like, yeah, Kelvin, I want to buy, but oh, the rates are so high, 6%. I'm scared. Okay. Well, if you're gonna wait for them to cool down, you're probably gonna keep renting for another year. Because like I've seen in the Fed funds rate targets, it still takes time after the Fed makes a move. It still takes a little bit of time before the mortgage and the wholesales and the cost of borrowing starts taking effect. Because they're correlated, but they're not exactly instantaneously correlated to the Fed funds rate targets. So what does that mean? Well, if you're looking to wait for the best time to buy, well, yeah, the rates will probably improve in 6 to 7 months, sure. But that's also when the rest of the buyers are going to start coming out of the woods. And then you're going to have, if the rates get down to the normal healthy 5 to 6% range, cool. We'll have a little bit more activity. It'll spur things going up. But guess what? Even at 5 to 6% range, then you're going to be competing against all the other buyers that are now priced in, that are now going to be able to afford that mortgage. And then you're going to compete with maybe 5 to 10 multiple offers when you buy a home that you love. Because a home that you love, guess what? Someone else probably loves that home too. Okay. If it's remodeled, if it has certain nice colors, if it has certain good location or a great school district, whatever your reasons are, there's someone else who has a very similar motivation. And then if you have to compete against 5 to 10 other offers, you might have to increase your offer 20,000 anyways. It's going to defeat the purpose of your rate improvement from 5 to 6% when you have to raise your price $20,000 just to beat that multiple offer. So it's all relative. Why not just write your offers right now, lock in a high 6% rate, but you're getting your price maybe 20,000 under asking price. And then when the rates dip to 5 to 6, you could refinance or wait another 6 months and refinance when it's 4 to 5% in a year and a half. Okay, your difference in interest rate over a 12-month period, it'll be very marginal. Okay, if you want to wait till a year and a half when rates might be under 5%, then you just pay 18 months worth of high interest of 6%. It's okay. You're not paying 29 years of it. You're only paying a year and a half. And it should decline below 5%, maybe an 18-month period. Okay, that's just some peace of mind, some arguments that you can bring out to your buyers and clients. Again, this is all speculation. I can't predict the future. But when do they believe rates will go down? Well, respondents to this survey says in the next 12 months, we expect rates to go down in the next 12 months. It'll take quite some time. So here's how we look at how the mortgage rates cool down. So year-to-year change in pending sales. As the rates have been a lot more expensive, we've seen a lot of pending sales really slow down our market to lowest levels in quite some time. This is the pandemic when no one wanted to go outside. Guess what? We had very few pending sales. We're at the same levels, okay? But there was a lot of fear. It's a different market 2 years ago. Mortgage rates down to a 4-month low in terms of the average 30-year fix. We're right creeping a little bit over that 6% mark, like I've been telling you. We're seeing this downward trend. So now buyers are getting some activity going on. That's good for everybody. And hopefully we get down to the 5% levels relatively soon. Okay. But anyone who's got down here under 4%, you guys did a very smart thing to do. So this is the outlook in forecasting single-family housing sales. They do expect a lot less sales than in 2020 and in 2021. Okay, so it's predicted in 2023 it'll be very similar or a little bit slower than it was in 2022. That's not good for a lot of you in our commissions, because if sales volume is lower than last year, then you need to step up and make a little bit more sales in order to have the same spending power that you had last year. So they expect the percentage change of volume to be like -8%. 30-year fixed rate, it will be averaged out to be about 6 to 6.6%. And that's really the end of the slides from Carr. Any questions? Okay, Angie had a great speaker invitation for the mansion tax. So if you have a high-end property, I think the mansion tax was over $5 million. There is a threshold where they're going to be taxing the wealthy, but that also includes real estate. And a lot of commercial property is over $5 million. They're going to be unfairly paying a little bit higher share of the towards property taxes. So if you want to learn about that, there's a class that she shared in the chat group. Let me bring back the rest of my slides. Any questions?
Thank you, Kelvin.
Oh, thanks, Angie. If you want to pitch anything about that class, go ahead and mansion tax.
Yeah, no worries. It's just a mansion tax increase for everything over 5 million. You stated it all. You need everything you said was perfect. So on point. If you guys
Perfect.
wanted to register, please let me know. Just click on the link and register. Thanks, Kelvin.
Okay. If you got a property over $5 million, go learn about how much extra taxes you're going to pay. New laws for 2023 is here updated. You can just check the link out. It's a legal update. Our new Moxie and our designs and for your flyers, everything is all templated, but beautifully presented. / you can choose your style. Just want to remind you to go back to Moxie, play with your product and your tools that we already are benefiting from for free from our membership with Coldwell Banker. And I continue to put on my classes here on YouTube. Let's go to the new listings. We're running a little bit late, so. All right, new listings. Let's talk about who's getting busy, who's been working over the Lunar New Year's and starting the year strong with a brand new listing. Congratulations, Mina. You have a new rental lease property, $6,800 per month for this San Gabriel gorgeous property. 4 bedrooms, 3.5 baths, almost 10,000 lot, single family, 3744 square feet, living area, beautiful Mediterranean style. Talk to Mina if you have someone looking for someone for rent. We also have another rental over here in Ontario, 2986 Arbor Lane in $3,000 a month for this 2,500 square foot beautiful newer construction home. That's pretty relatively only a little over $1.10 a square foot, relatively affordable in Ontario. And Nancy and Amy have a new listing in Rancho Cucamonga, 7741 Garnet Street. This is a 3-bedroom, 1.75 bath, 1578 square feet with a pretty nice lot of 7,700 single family under 700,000. What a great deal. See if you have any clients for Rancho Cucamonga. And if you're closer to this neck of the woods, we got under $1 million. This big condo, it's 1742 square feet, 4-bedroom. And Henry Liu, congratulations for this Monrovia condominium. It looks like it's detached. So it's probably a PUD / it's detached. So it looks like a very nice purchase. Considering it's actually a nice property. So take a look and talk to Henry. And if you closed in the last couple of weeks, like myself, congratulations. I did close finally. This is a 9-month transaction that I wanted to eventually get done. It took me a lot of negotiation to get this down to 2.108, and I still felt it was high. But at the same time, it is what it is. 1000 Snyder Lane, gorgeous mountain views, large lot. And originally this is priced at 2,780,000. So we could tell you that my clients are super happy that I was really through 6 to 8 of those months, really forcing and telling them, do not increase your offer anymore. Let's wait for the seller to finally cool down their stubborn attitude towards the inflated value that they had in their mind. It took the market, it took 7 months for the seller to come down onto a realistic price. And we finally got this one closed. Laura Liu got 5939 Rosemead Boulevard. This is Temple City, 2-bedroom, 1-bath, small home, under 1,000 square feet. This one just closed a lease. And congratulations to Lorena. Very happy for her. She leased out 1382 square feet living area in these condominiums that are right across from our Arcadia Mall, Westfield Shopping Mall. So congratulations to Laura. She's got 3893 Durfee Avenue in El Monte. This 4-bedroom condo sold for $688,000 in El Monte. And Melissa, she got her Huntington Drive, number 11, Arcadia. This condominium closed for $875,000, over 200,000 square feet, so relatively pretty big. Also a great location right here on Huntington Drive. Very, very excited for the resilience and the persistence Laura had as she closed out 985 and 987 Foothill Boulevard in Claremont. This commercial mixed use has some office spaces, a lot of retail, a property right here in Claremont that took over 1 year of hard work. So she had some complex issues that we were able to work out and manage, finally get some broker assistance / get some language together to get this closed with the same buyer for over 1 year. Tammy Chung got this one leased out. Congrats to her, leasing Autumn Oaks Lane in Glendora for $27.50 per month. And I think that was the last one, unless if you have any coming soons or you have any price changes you want to pitch, any off market, anything you want to share, we'll be happy to spend some time with you right now. All right. So I just wanted to kind of just end today with a thank you for being and sticking around to the very end. I'm having some, we celebrated from Temple City side and Arcadia side with a little bit of a luncheons. I know Margaret cooked for the Arcadia agents last Friday. For us at Temple City, we had a little luncheon over here, dim sum on Monday. And I want to just wish all of you in this Lunar New Year's and for 2023, the year of the rabbit, let's all really just come together. If you know how rabbits are, they're very social bunnies. They're very loving, they're very kind. And to the rest of you, to your clients, we're trying to, that's a theme, is to really just wish everyone well. You know, we recently just know and seen in California several mass homicide shootings going on, murders. People didn't deserve to be killed. Locally here in Monterey Park a couple of days ago, right before the Lunar New Year's, you know, that we had a dance studio that got shot by, and I have firsthand knowledge because some of our agents actually frequent and are customers at that dance shop. So I do know that they actually seen this person at the dance studio. They have and take classes there. They were part of the parade where they're going to have a dance together. So they're telling me that he is a past employee, had a dispute with, I guess, the management / maybe it's a personal issue with his own ex-spouse who was dancing and chose dancing over family or marriage. But regardless of which, there was some revenge going on, at least for the Monterey Park shooting. And you know, just be out there to kind of just put out all these fires. We're doing all this stuff for our clients and in our business, just solving problems and solving people's issues. But hopefully the goodwill and the positivity that you spread will get our community and all the people around us in our neighborhoods, hopefully just to come together. You'll see a lot of that, a lot of negative news out there. You're going to see more killings. There's going to be in a recession / period of time where there's a little bit more hardship. We're going to see a little bit more unemployment. We're going to see a lot more crazy things going on. So when we see an environment where there's a lot of crazy things, a lot of drug abuse, there's going to be a lot of people who are mentally ill, you're going to need to protect yourself. So I'm telling everyone, this is the year. In a mild recession or a steep recession, look out, watch your back. Whenever you're in your car, you're driving or walking alone, have your weapon ready or just be observant. Don't just be on your phone looking down the street. You're going to be a very easy target victim. I don't want you guys to be victims. So my message to you is to have your head up, look around, watch your back, be extra cautious, have a phone or talk to somebody while you're walking in a dark area, whatever it is. Ask someone to accompany you while you walk to your car to make you feel comfortable. So be careful in a bad or a mild recession. I'm just saying there's going to be a lot of crazy people out there, especially in California. There's homelessness out there. There's drug abuse. So just want to say and wish you all a very happy, fortunate, successful 2023. Most importantly, to your family and your health. So wish you all good wishes, and thank you for staying to the end, guys. Anything else? All right, that's it. See you guys. I'm gonna stop the recording.